Hey everybody, Boris Lassman from BK Forex. Welcome to our Forex weekly technicals for 10/14, 10/21, down to the wire. As always, trading foreign exchange or margin carries a high level risk when suitable for investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin. Seek advice from a financial advisor if you have any doubts. Well, we are now in week 2 of the U.S. government shutdown. Still no resolution, but clearly a lot of negotiation going on. Tremendous amount of expectation here that something is going to get done over the weekend and or into Monday, as the pressure now builds towards the October 17th date, which is when everybody thinks that the Treasury is going to run out of money. You did see a little bit of a dollar rally into Friday. You see the euro now starting to back off, coming off the 36 handle, kind of like flirting around with the 35. 35 is still pretty strong support. A deal probably will push us through the 35s, but the real big test is going to be the 34.50. If that doesn't hold, that would suggest perhaps a stronger counter trend move, about $1. But for now, it's still a very, very tight, low volatility environment. Basically, if you think about this, from what date is this? This is around September 7th. Basically, in a month, we have done nothing but just moved 200 points up and down and just channeled up and down in the euro. And we'll have to see how close these ranges remain. No deal, perhaps a full kind of a panic attack and a prospect of a much stronger idea of U.S. default. Very tough to say, but it seems that on the one hand you're going to have risk aversion, so I don't know if the euro is going to be able to push itself higher. On the other hand, you may get the safe haven bid. In either case, you have to watch the levels. If the levels get taken out here at the 36.50 level, then we do have a very strong chance of going towards the 37s, 38s to fresh yearly highs. On the other hand, if dollar situation does get resolved, we push through below the 34.50s, then the move potentially is all the way towards the breakout zone of 33.50. So for the time being, it's really going to have, you almost have to watch the price rather than the news to get yourself some good ideas of what's going on. Dollar yen is going to be a much clearer trade if things resolve one way or the other. Right now, clearly signaling that the situation in the U.S. is going to get resolved. You see dollar yen closing 98.57. In many ways, at this point now, going into much more of a neutral mode. It's been in a very, very negative mode, as we've been saying for the last month and a half. Lower highs, continuously drifting lower. We tested this 96.50 support. This became a double bottom. Bounced off of it on optimism and expectation that things are going to improve as far as the budget negotiations, and holding that level, which means that the market still remains to have confidence that the U.S. Fiscal problems and sovereign debt problems will be solved. This is where it gets interesting, because if they don't get solved, the clear move is going to be to the downside. But here is going to be very, very interesting, because the market clearly is going to speculate that eventually they will get solved. So whether they can break 96.50 remains to be seen. If the situation becomes incredibly dire, then the signal from the price is probably going to be a break below 96.50 and potentially a very, very quick collapse towards 94.50s. This would pretty much present a full capitulation and a very, very bearish scenario where you have technical default, continuous government shutdown, dysfunctional government, and no true action from Washington, D.C. Very outside chance of that happening. I think it's relatively remote, but a very quick break of the 96.50s would signal that's exactly the scenario, and then you could have a very quick slide all the way out to the 94s. In the meantime, to the upside, we're now coming into this congestion zone of around 99, 100, and it's really going to have to be a resolution of the opposite scenario, where you have complete and total optimism. You get the deal done, everything moves forward. U.S. economy actually looks like it's weathered the situation well, and all of those points create the momentum for the conversation that perhaps the Fed is going to taper. Because what will push dollar yen through all of these levels is the complete change of sentiment and belief that taper is coming. If that's the case, then you will get a push all the way up here, first to the 99s and to the 100s. So either way, I think the scenario for both of those arguments remains relatively remote, which means prices are probably going to bounce, come back, bounce, and come back, and we have a lower volatility churn. So you have big wave, small wave, smaller wave, smaller wave, as the situation resolves itself. In either case, very much worth watching. Obviously, the 99 levels to the upside here, the 96.50s levels to the downside, as key tells on the stress of this particular pair. Cable, Cable actually has an interesting situation coming up this week. So aside from all of the nonsense in DC, if you sort of look on the pure fundamental story of cable, there is a lot of data coming up this week, and it's going to be in many ways a make or break data set, because what you had in cable here was this massive rally as economic data completely over delivered and surprised to the upside. Then you had a slowdown and a correction as the economic data now under delivered and missed to the downside. We're now basically in a head and shoulders formation. This 59.60 level is up, and of course, holding on for dear life. And if the data under delivers again this week, we have retail sales, we have PMI, we have CPIs, and if it disappoints, then the potential for a crack to fill this gap at around 5,800 is quite significant. And again, that could be a very, very sharp move to the downside. So worth watching cable here for a possible sharp break to the downside. If the data is relatively good, then we have another rally back up. But 61 and 62, very, very significant resistance points. So it's going to have to battle through a lot of overhead resistance to make any kind of headway to the upside. Aussie, on the other hand, Aussie, on the other hand, has been in a much better shape. If you look at how well it's been bid, it's been actually extraordinarily well bid. Again, on the assumption that Australian economy managed to weather the slowdown out of China, come back into positive employment territory, have a relatively low rate regime, but a regime that is not going to go lower, and has sort of come back, it's brought itself back up towards the 95 level. RBA has not been nearly as vociferous about the high exchange rate as it was at these points over here, because I think in many ways they feel that they've been able to slow down, stimulate the economy enough that it's not tipping into a recession. So at this point, we find ourselves at this very, very key 95 juncture level. It's come up against it once, come up against it twice. If we break 95, it's sort of, if we go to 95.50, that would be a very bullish impulse and suggest that the Aussie now could possibly recover all the way to 97, 98. That would suggest in many ways the resolution of the U.S. crisis, because in many ways, I think who will respond best to the resolution of the U.S. crisis will be the Australian dollar, because it's the ultimate risk trade, and the resolution of the U.S. crisis is the ultimate risk move. So one way to look at it is you can look at Aussie, or you can look at the other trade which has been performing extraordinarily well this week, which is Aussie yen. So positive on US in many ways will be this key level, 94. Aussie yen, just like as Aussie has been hampered by 95, Aussie yen has been sort of held back by 94. A breakthrough here, positive move on the US resolution side, and a strong sentiment rally towards risk assets is going to bring all this flow up into 95s and break of 94.50s, and possibly even 96, really all the way up to 98. So you have this huge extension possibility in Aussie yen, as both Aussie and dollar yen become well bid. The other trade on the Aussie, of course, that has already been happening quite well, where's my Euro Aussie, is this Euro Aussie trade, which just continues to tickle the 42 level. A break of 42 to the downside opens up a run all the way out to the 140s. So in many ways, the trade next week is going to be interesting, because if you have positive U.S. news in the Forex market, it may be the Australian dollar that could be the ultimate beneficiary of that resolution. We'll see how it goes. It should be a very interesting week. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg. Over and out.